Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. I guess this would be the U.S. Open. Today, we're going to be talking about how to trade durable goods. That's going to be our fundamental of the day, U.S. durable goods orders, and we're going to have the WTI crude oil inventories number dropping in about a half hour. So we've got a lot going on here on what is probably going to be another active day. I mean, we've got the Dow Jones Industrial Average trending higher. You've got the NASDAQ coming off big. We've got a key level in the NASDAQ. We've covered in the last several sessions. We've got to cover it again. And also, we've got an orb. We've got an orb setup coming our way in the US 30. So I want to welcome everybody back to the room. It's good to see you guys. I think that we're going to have a fantastic trading day today. Yesterday was great. Today is going to be great. Tomorrow's going to be great. It looks like a lot of what's going on in the federal government is starting to settle down just a little bit. Now, I know there was a big scandal yesterday in the Atlantic magazine, but it doesn't look to me like anybody's buying it with regards to any sort of changing in leadership here in the United States, and also tariffs. We're going to talk tariffs because I made this point a while back, and I'm going to make it again today because it's very important, what we know about tariffs and what we think is going to happen with tariffs. All right, guys, but the first thing that we got to do is we got to get it with an orb. Now, we've got this is a 15-minute US 30 chart. That trade earlier this week, we hit it. It went up, touched our first take profit, which was a pretty darn good little trade. This 15-minute orb, solid. If you want to trade an opening range breakout on U.S. equities, right now is when you do it. It's about 8 a.m. my time, 10 a.m. Eastern. We've been in the saddle about 30 minutes, 15-minute chart here. This is a very tight intraday trade, but it does give us an opportunity to actually trade it. So remember, our opening range breakout strategy, this is about as easy as trading gets. I have to tell you that I like this strategy. It's really starting to grow on me, and I especially like it with some of our confirmation tools that we have that sort of maybe can, I would say, help us sort the bad trades from the good trades. In any case, 15-minute orb, there's the first bar, opening bell, ding, ding. There's the second bar. That's our range. So right now we're waiting for a breakout. Now, if we're looking at the 920, that's the 920 crossover. This is our coded 920. If we're interested in using that as a confirmation device, there's one thing that we could point to that says, yeah, maybe we want to be on the bullish side of the ledger. And right there, we had sort of a signal about a 5 a.m. my time, 7 a.m. Eastern. And this has been a real nice rally since we got that bid signal, since the 9 crossed over the 20. One thing that I'm looking at very closely, and I'm considering doing some back testing, is these signals that we're getting ahead of the U.S. Open by a few hours, they've been pretty good. And I mean, they've been pretty good all week long. Now, I'm looking at this thinking, okay, so if in fact we were going to take a position on the 920 going into the U.S. Open, do we have a chance to make any money long-term doing that? I don't know. A lot of times we get a lot of reversals on the Open, but so far, I would say the last 30 days, I've seen a lot of these signals, and a lot of them look pretty good. So maybe if I have an hour or two this weekend, I'll do a little hand back testing and see if we can't build a position trading type of an environment there. Give us a shot. Mark Corp, good to see you, Mark. All right, guys, that right there is going to be our opening 30-minute orb. So with a bit of luck, we'll get a trade. We get to execute on this live stream. So maybe in the next 12 minutes, if we can get a breakout above it or below it, we'll have a chance maybe to build this trade. But I will say this right away. I would probably rather be going long. I would rather be going long on the US 30 here, opening range breakout. I think it could be a pretty darn good trade. So we're going to be watching that US 30 closely. We did the same trade the other day on Monday, and it turned out pretty darn good. Pretty darn good. All right, guys, a lot going on in the markets today. Let's go ahead, and we got a few things to run through, and then I want to talk Tesla. I want to give you the biggest level in the US 100. We've also got to look at US oil, too, and if we're still around here in about 27 minutes to 30 minutes, then I will be trading the US oil market, and we'll be trading it live during that EIA crude oil inventories report that drops in about 27 minutes. Those numbers are going to become more and more important. Worked on a newsletter that went out to many of you where we talked crude oil. We talked about Trump administration, what's happening with the state of crude oil. Are supplies rising? Is that potentially a bearish market driver? Well, right now we don't really know, but we are going to get all over it here in about 26 minutes. So I'm interested. I'll show you maybe how to trade a WTI crude news drop. I don't typically trade them, but I'll wait a minute and then we'll trade it. That's for sure. All right, so let's get on with the show here. Trade follow-up. This is the first thing that we're going to do here. Euro Great Britain pound support zone in play. This is one that came out late yesterday. I put this one out. And unfortunately, occupational hazard, we just missed our entry by about 5 pips. which is frustrating, but that's part of doing business when you're using horizontal support and resistance levels. You make your play. You find your level, you shade it, and then you look to get in on the action. And if you don't get in on it, you don't get in on it. Now, the market's still going to stand. The trade idea is still going to stand, even though we pretty much already missed the move that I really wanted. But right there, you can see this is a good trade follow-up. Euro, Great Britain, Pound looking to buy right from that golden zone, right up above a quarter handle. I absolutely love that trade. 83.27 was going to be our entry right above the golden zone. As you can see right here, we came very close. Very close. There's the weekly, and just check the chart out. I mean, you can see when I wrote this, I said, yeah, we got a pretty darn good chance of coming into play here, but we just didn't quite get it. We didn't get it. We saw the nice sell-off there on the weekly. The low went to about 83.32. That's frustrating, especially when you're trading a product that's pretty much, I use the term dead conservatively, but, I mean, day in and day out, the Euro, Great Britain, Pound's dead. And to find a good day, a volatile day, that's very difficult here. Usually it revolves around a news event. But this one right here, sold off. We had a decent chance down there at our level's 83.21. I wanted to shade that and be aggressive, and this is why I thought that this golden zone was just a beautiful thing. Now, a lot of folks just love trading the golden zone. They say, you know what? As soon as we get into that golden zone, maybe halfway through the golden zone, which is the area between the 50% and the 60% zone, I'm just going to go ahead and bid that and play the rally. That's certainly a way to trade too. It's a good strategy. You just have to be consistent with your entries. I like to build my Forex entries around quarter handles, half handles, three-quarter handles, and full handles. So I would be looking to really go long from 25, 50, 75 in flat numbers, the even numbers, and shade that by a few pips. Bobby Bob, good to see you, Bobby. Welcome. I'm confident everybody's trading well these days. This has been this week has been a great week to trade. Last week was hard. It was hard with all the central banks really getting involved. But this week here, this is a dandy, and I'm absolutely pretty much ecstatic by the way things are going. Right there, though, 62%, nice bounce, 83.59. So that was the move we wanted. We didn't quite get it, but that trade idea is going to stay. I'm going to go ahead and leave that down there. I think 62%. If we do get another chance that's going to be pretty much a gold trade, I think we'll get it. We'll get a nice bounce off of there as well. We're just going to have to be probably a little more aggressive with our trade management. So if, in fact, that comes to pass, then we will certainly we'll certainly have to do it. We'll give you some instruction there, and we'll trade it as it happens. All right, remember, if you want to trade any of these trade ideas, go on over to Switch Markets. Double up your money, 100% credit bonus. There's a ton of leverage. I saw absolutely incredible leverage they're extending right now. Depending on your region, the leverage is going to differ just a little bit. If you're in the EU, it's going to be a little bit less than, say, if you're in Asia or some other or the Middle East, some other municipalities. But definitely check out Switch. I believe there's an ongoing contest too as well. So just sign up for your demo. You get free access to all the contests and everything. And we are, in the near future, we are going to be live streaming, and I'm not necessarily sure what that's going to look like, but we're going to be doing a little bit of streaming with the folks over at Switch. I think that'll be a lot of fun. Looking forward to it. I will keep everybody posted when exactly that stuff is going to transpire. Okay, yesterday we put out a video yesterday morning called the Forex Orb Strategy. I got asked a lot to build a Forex Orb strategy, and what this basically is, I gave you two ways to trade the Forex Orb, one on the electronic open and one on the session-based open. So a few of you have seen this video. If you like it, that's fantastic. But if you're looking for a way to trade the Forex on an opening range breakout, type of a motif or type of a strategy or structure, definitely check out the Forex Orb. You'll have an opportunity there potentially to trade your favorite Forex pairs. I even did some examples with spot gold. I think you could trade spot gold based on the electronic open using a 4-hour chart. I talk time frames. I talk about when you need to be looking in the market, and we give you two distinct ways to trade it. One's on the electronic open and the other's on the London open. So definitely check that one out. I think it's a pretty good video and can give you an opportunity to grab some Forex moves a little bit before they develop. We want to remember, an orb, we're trading breakouts. We're trying to get in on trends before they occur. Interesting strategy. I hope you guys enjoy it. Okay, this was the week for this week, week 13. It's already week 13. Wednesday is going to be the EIA crude oil stocks report and also U.S. durable goods. U.S. durable goods are going to be really our story of the day today, or our fundamental of the day. Remember, Tuesday, Wednesday, Thursday, we're trading hard. We're riding hard. If you're a cowboy, we are riding hard. We're cowboying up. We're pushing our horse. We're trying to get the cattle in. We're putting up the hay. We're doing whatever needs to be done Tuesday, Wednesday, Thursday. This is when we trade. This is when we want to trade. A lot of times Mondays are tough. Fridays, psychologically, I want people to take home money on Fridays. No donations Motion Friday. Remember that? Tuesday, Wednesday, Thursday, psychology. Trade our plan, trade it, and trade it hard, and build the account. That's what we need to be thinking today. We are aggressive today. We want to trade today. As far as the news of the day goes, durable goods is going to be our fundamental of the day. We're going to cover it very, very briefly. I'm not going to really go into too much depth on it just because I'm not necessarily certain that we need to spend much time on this type of fundamental. The reason why I even mentioned it is because it came in above expectations, which sort of ran contrary to yesterday's consumer confidence figures. You can see right here, core durable goods came in at 0.7. That was over 0.2 expected and well over 0.1 previous. Durable goods orders month over month came in at 0.9, which is another good number. We were anticipating a contraction, and it actually came in big. These are preliminary figures, so they still may be adjusted, but that is a very, very positive sign for consumption. Remember, our recessionary narrative, everybody's talking recession. Why? Why are we talking recession? Consumer confidence. If consumer confidence lags like it did yesterday, when you have lagging consumer confidence, people save their money. They don't buy as many things. So something like a durable goods orders, which basically are pretty much any things that you have to finance or bigger purchases, you finance for a few months or maybe a year. We're not talking about vehicles or anything like that, but washers and dryers, maybe microwaves, maybe new ovens, things like that, appliances, big appliances that typically you may finance. Durable goods are a good look at what consumption is, not necessarily from a CPI perspective, buying, just the staples and everything you need to live, but also those other things like, maybe I want to buy a new TV or something like that. Durable goods is a pretty good indicator of what consumer confidence is. The higher the durable goods orders, the better consumer confidence is, basically. So yesterday's numbers, even though they didn't look good from the CB, the chart book consumer confidence, core durable goods sort of went right over the top of that and said, I don't know, there's still pretty good consumption. This is an interesting set of numbers. Now you got right there 0.8%, something like that, and goods orders non-defense acts. We can look at those defense numbers if we want. I'm not too concerned about it. I just look at the raw numbers, and just the aggregation really shows that there is extra consumption there. Interesting stuff. So that's sort of a look at durable goods. We are going to look at sort of a chart here in a second, but I do want to get back out to our US 30, and we've got our US 30 orb sort of loading up. We've only got about another 2 minutes, 40 seconds. Remember, in order to trade this on a 15-minute, this is a 15-minute duration, you've got to get a bar close either above the orb or the opening range or beneath the orb, and then we go ahead and enter, and then we put our stop losses and profit targets. Was there enough in durable goods to drive this market? Well, we had a positive durable goods number. That sort of suggests that maybe some bidders showed up on the open thinking we aren't going to get that big recession. So something like this, let's see right here. Right here, I want to go to the durable goods just to sort of show you exactly what happened here. New orders for manufactured durable goods in U.S. unexpectedly increased $2.7 billion. $2.7 billion, that's a big deal. 0.9% month over month, following an upwardly revised 3.3% jump in January. What does this mean? That's a relatively solid number because we've struggled here, and this rash of durable goods numbers pretty much had everybody thinking we were going into a recession just because that spending had really slowed down. Then we saw a big jump in January. Now we see a positive number in February. March will tell the tale. That's for sure. But it's still really a positive market driver here for what is a number that a lot of people believe is a leading indicator of recession. Now, as far as the stock markets, business, news, all this jazz, there's one thing I want to point out from the headlines today. Absolutely huge. Treasury Department is set to lay off a substantial number of employees. That's window dressing. Don't worry about that. This is what we want to worry about. Tariffs. Now, remember, early April 2nd, Trump was going to put a bunch of tariffs on any country that was basically placing tariffs on the United States was going to get a reciprocal tariff. Meaning, if you were putting $50 million on, or if you were putting a 25% tariff on me, I'm going to turn around and put a 25% tariff on you. That was the idea. But here's what I was saying about the tariffs and the Trump tariffs, and I've caught a lot of flack online. A lot of people don't like me saying this. Typically, if you're either a pro-Trump or against Trump, and I'm looking at this as a business person, as somebody who is in the markets, wondering what they could do to the markets. This is how Trump's going to use the tariffs. I guarantee it. This is exactly what he's going to do, and he's going to do this for the next 4 years. So just be ready for it. Trump says tariffs in April will probably be more lenient than reciprocal. So what does that mean? It means that, listen, he came out, he threw a bunch of tariffs down and says, I'm not afraid to put tariffs on anyone, anywhere, anytime. I'll do it. I'm crazy. I'll do it. That's basically what he was saying. He says, I'll do it. We're going to do it. All right. Then what? He sees if he gets what he wants, and then he starts walking back the tariffs. It's that simple. So when you see a big, he's going to put a 300% tariff on, French wine or whatever, if he gets what he wants, the tariffs come off. That's all it is. It's a negotiating tactic. It's the bottom line. So anybody that sits around and cries about tariffs all day long being the end of the world doesn't understand what's happening. It's negotiations. Trump's negotiating. The Trump administration's negotiating with everybody. Now, does it send shockwaves through the market? Yeah, it does. Is it tough to trade? Yeah, it is. But this is how we need to view the tariffs. If there's a big tariff announcement, don't panic. Don't panic. Let's wait until these tariffs are put on goods and services. Let's wait until they're actually put on, and then let's see what happens from then on in. And as the year goes on, the more we have tariff announcements, the less you're going to see the market panic over them. And that's pretty much just the bottom line. So I did want to cover that. That's how we need to be thinking about tariffs. Don't get too carried away with them. Don't let them scare you. Don't let them change the way you trade. Just be aware of what they are. They're a negotiating tactic. There's no question about that. All right, in any case, right here, US 30, we didn't quite get our orb. Maybe in the next 15 minutes we'll get a breakout there. I do want to get out to Tesla, though. Tesla's got an interesting situation. You're starting to come off today. You're off about 4.5% or 4%, but just an epic two-day rally. We came out of the blocks hard on Monday, and you were up about 12%, and then you came out of the blocks hard there, up another 3.5% yesterday, and that's a big move. That's about 15%. We're pulling back a little bit today. This stock, if you're a day trader, if you're day trading stocks, this thing has just absolutely huge moves. Absolutely huge moves each and every day. So this is one of those stocks that it moves like a commodity. It really does. Lots of action, and that's really what we need to be day traders, or at least successful day traders. This is interesting to me, though. This is our 920 crossover. I'm waiting for the 9 to cross the 20. Once the 9 crosses the 20, you can see down here this is a daily chart. This is going to be probably a swing trade or maybe an intermediate term investment, but we were deep in oversold territory down here right around 220, and since then we bounced about $50. So, this is an explosive market. If, in fact, we do get the crossover, I would be looking to buy it. Now, what I would personally really like to see is a deeper draw, and let's get down around 200 or 180, and then we can take a shot really for a home run and maybe look at making 60 or 70% returns on a Tesla play that's over a few days, maybe a few months. I like that play. The infrastructure's in place. Believe me, Tesla is going to come out of this political firestorm. They're going to come out of it very well. They're positioned as far as an EV provider, but also you're going to see Tesla probably get some favorable treatment from regulators, at least under the Trump administration. That's the reality of it. In any case, I'm looking at Tesla. I'm looking at a potential bid. US 100 right here. Okay, US 100. This is the biggest level in all the land as far as stocks go, and I want everybody to really understand what this one means. 19,112. If, in fact, we sell off beneath March's low, we're going to come off in a big, big way. And I would say, right now you've got a pretty good correction on. We're trading right around 20,110, something like that. Okay, 20,110. You've got 22,000 was our all-time high, 22.2. So we're off about 2,100. What's 2,100 divided by 22,239? Right here, 2,100 divided by 22,239. You're going to have something like 9.4%. Right now we're on the cusp of being in corrective territory. If you're down 10% off of all-time highs, technically you're in corrective territory. I believe that the real correction develops underneath 19,000, and if in fact we do trade beneath that, maybe in early April, it really is set up with the reciprocal tariffs going into effect and just a fresh month on the board. It really is set up to wash that zone out. We put a trade idea out a little bit earlier this week that really suggests that we need to be short underneath 19.1. That's a big deal. That's a real big deal. So why should I be short there, Shane? Well, a couple of reasons. Number one, from a macro sense, and I broke this down the other day, but from a macro sense, you've got just a pretty stiff wave count going back to March of 2020. I would say that's a 1. If you're an Elliott wave practitioner, that move would be a 1. That's a 2. That would be your 3. Little tiny 4. There's your 5. That's your directional move. So now we sort of start all over again. The question is what happens here? Well, this move right here would be our 5 wave. Be a really strong 5 wave. And the reason why we sort of ignored this pullback right there is because it was a big doji. The bidders actually took over before the bar was closed. Interesting stuff that's happening here, guys. Right there, though, nice big sell-off. So the question is, what happens if we get a break beneath March's low? That's huge. And there's one more reason that makes me believe that that is an absolute inflection point, an intermediate-term inflection point for this market. August's low, the big August dip. Remember that? Japanese carry trade destroyed the markets. Panic, pandemonium, cats living with dogs. Sell-off there, rally there. Look at what we got. This is in that Fibonacci counterpunch series that's under the elite trading series here in the trading room. 62%, 19,143. That's sort of your low there, 19,112. That zone right there is where the money is. Macro wave and then sort of a much smaller wave. And that intersection right there really tells me that that's an intense support. Once that breaks, good Lord, look out below. Absolutely look out below. A lot going on here with the US 100. Tesla's a big part of it. Big part of it. US 100 right there. All right, guys, let's go ahead and take a look at something. I want to see if we can get maybe another orb going here. We've got a US 500 on our 920. You can see that we've got sort of a crossover there. That was an absolute fantastic short. If you got it, now we're sort of looking to cross back up over this on the daily. This would be an interesting type of an orb trade right now. Pretty good stuff. Pretty good stuff. What do you got right there? Opening bell, ding, ding. Okay. Right there, opening bell, ding, ding. Big candle. You got a sell signal inside of your orb. I like that. So if we close outside of this at the bottom of this range, that right there is your orb range. If you close outside of it, you're going to look to go ahead and sell the US 500 and look for downward extension. That could be a very good orb trade as we roll deeper into the session. I like that. Personally, I would like to see it. You know, we're getting the big move right now. I would love to see this pull back up in here and maybe give us an opportunity potentially to trade with a little bit better trade location. Remember, there's lots of different ways we can trade this. I mean, we could put a Fibonacci on this orb and look to sell up in this range, something like that. But right now we're on the move, and we're on the move south. Interesting stuff. You got to sell a 15-minute sell signal from the 920 crossover inside of your orb. I would say that's a very strong signal. Very strong. Interesting stuff right there. I love the way some of these indicators line up. All right, guys. Well, we've got a few other things that we need to look at here. We've got all sorts of stuff. I'm going to go ahead and give some opinions out. If there's any markets that you want me to look at, go ahead and just let me know. But right now, I would say that let's just go basic price action, dollar yen. Interesting stuff right here. We had a fantastic call a while back using our monthly, and it was something like this. Bounced right off of 62%. Had a strong rally, a solid rally, good rally there. Excuse me. But right now, how would we be looking to trade the dollar yen? Well, I'm looking at the DXY. The DXY is right up around 104. That's our dollar index. So it's sort of being established up above 104. Is this retracement in the dollar yen over? I would say there's a pretty good chance that it is. Do I want to buy or sell? Well, I mean, it's really tough because you've got sort of a 2-month losing streak. You've got a doji setting up right now. You've got really a topside resistance level potentially coming into play at 150, 150. Let's go ahead and just take it down to a lower time frame and see what we have. Okay, you got a spike high there and a spike low. But we're sort of right around that 78%. I don't really want to do that. I'm not interested really in trading there. Do I want to buy or sell pullbacks right now? I'll be looking at a bit of pullback. Absolutely nothing wrong with that. Maybe a shorter range trade, something like this. You can see what the key level is, 38%, 149.87. I would be watching that relatively closely. If, in fact, you do get that bounce, you're definitely going to want to watch that one. That could be pretty good. If, in fact, we trade it again, we're already up 50 points, 50 pips, 60-something pips, actually, 58 pips. That's a pretty good trade. So right now, on the daily chart, we can say that we sort of have a bullish trend going. We came off of these lows that developed back on the 11th of March. Bang, there's your pullback, and then we took off, and now we're right around this. So what do I want to do right now? Well, if I want to trade it right now, let's go ahead and buy it. Something like this. Spike low, spike high. There's your pullback. It's kind of already over, I would say. Right into that golden zone and then a bounce. What do we want to do here? Want to maybe, just maybe, go down to a 30-minute chart and see if we can get a level. Okay, now we're talking. Do we have an opportunity here to intraday trade this? Yep. Pull back there about 150.38, something like that. It's already gone. That would be a big intraday level. I'd be watching that one closely. Do I want to be long or short right now? I would have a tentative bullish bias just because we have a pretty good move here. That's your durable goods number. Bang, there's your pullback, bang. Potentially we could be looking at the top side of this market today. Just not real sure exactly when we want to get in. We could buy it right now, but if you do that, you don't have real good trade location. You need to be long from down here right around 39-ish, and right now we're printing 45s. That'll be a tough intraday scalp. I believe there's better things to trade out there. I really do. Definitely something to think about there, though, if you are active in the markets. That's for sure. Okay, let's hit commodities, then we're going to go ahead and call it a day. U.S. oil, this was a fantastic trade. We had those 69 sells, paid us off great, and we sort of said, hey, listen, when 69 breaks, we're really going to rally and go to the top side, and now we're knocking on the door of 70. So as a general rule, I'm not a 50% trader. This is a 50% weekly retracement right around 70 and a quarter. Our high this week, 69.97. So we're having problems at 70. If in fact we wanted to sell this thing, like I said, this wouldn't be a high probability trade for me. I wouldn't sign on and say something like this. Not really too interested in it. 70 and a quarter. Now we can trade it. If we were going to trade it, we would be looking to sell from right up there. I would say probably 20-ish. I want to be conservative with this entry, though. I don't want to be too aggressive because I don't particularly like 50% levels. Nice sell there. Right around 70.22. You're probably only looking for 12 to 15 ticks, maybe 20 ticks tops. That's a scalp. Now, I'm more interested in 71.39. That's what I'm interested in. Let's go down to a daily chart and see exactly where we're at. Sort of there was our trade. There was our doji right at our key zone. We broke above yesterday's high. And now we're on the rally right up there to the top side resistance zone. That's absolutely fantastic stuff right up there. So if you're in there about 70.22, it's probably going to be a decent sell, but I would say this, something like this up here. It's better. Back into the golden zone, 71.39, maybe 71 and a quarter. That would be pretty good. But remember our golden zone rules between the 50 and the 62. I'm definitely a seller right in front of 71. Still have a short side bias, but we're seeing good pop here in the crude oil market right up around $70. A lot of it has to do with geopolitics. A lot of it has to do with, what's happening here. Just I would say that the government in the United States, the uncertainty is definitely driving the bidding. Today we're going to see if there's more supply coming online. Last 3 weeks there has been. We just don't particularly know exactly how high those figures are going to go. All right, let's go ahead and hit gold, and we'll go ahead and call it a day. Let's see. Look at all that stuff. As far as gold goes, relatively straightforward reads for me. I mean, we're not reinventing the wheel. Something like this, daily double bottom to a pullback. This zone right down there, 29.90 is pretty darn good. I believe our weekly level that I had out is going to be right in there. 29.71. That's a better level. Nice, clean 3-week winning streak. And then you go right there to 29.71. Something like that. You got a nice hot bid for you. And that's not too bad. That's not a bad bid. So if we do get a chance there, and believe me, it's only a few dollars down there, about $45. We could easily get that on a washout of 3,000. That's what I'm looking for. As far as the short-term strategy goes, it's really hard to argue with buying 3,000s. It really is. And if you want to just plot it on the chart, there you go. There's the 3,000 level. Remember that one? We nailed that one right in here. Bang, bang. So the real question is do we get maybe a breakout and a reversal? I think you almost have to be a bidder at 3,000 until proven otherwise. That area is definitely stepping up as support as opposed to being resistance. Now that it's gone as resistance, it is serving as support, and that's really the real question that we're looking at here. All right, let's go back to let's pull up a WTI chart here. Let's go intraday WTI. This is going to be your front month contract here as this number drops. Let's see, what do we have here? Just a few seconds left. 50%, and this chart's going to be right around 70, 71. Let's take this down to maybe a 1 minute chart and see what exactly develops with this WTI. Lot of dojis there. Lot of dojis. That's ugly. Significant volume, and let's go ahead and see what happens when this number drops in about. Well, actually, it already dropped right there. Bang. That's going to be your EIA crude oil inventories report. Nice little chop right there. This happens repeatedly. So if I was looking to trade this, I would go up to a higher time frame. I'd probably dial this up to maybe a 30-minute chart, and I'd say, okay, what's going on here with WTI? Notice I don't have any indicators up. I'm just trading price action today. 6:30. So that's going to be from the durable goods orders place right there. Very, very tight. Very, very tight EIA number. You typically would see more action than that. Okay, so if we were working this wave right here, this has the durable goods release. This has the U.S. Open. This has a lot of really good information in it. Let's go ahead and see if we can get this going with a little bit of a scalp here. So let's go ahead and trade it. I want to buy. I want a buy limit. I want 4. Let's go with 4 contracts. I want it right at about 80. I want it right at 82. Let's go ahead and put a buy limit order down there and see if we get it. It's going to be a bit of a challenge, in my view, to get filled here. It always is. Okay, right here would be our trade. I mean, this is what it looks like. Let's go ahead and get rid of all that. I mean, this is what it looks like. You're going to see we're going to come down potentially right to our entry point. Now, we're going to be very quick on the trigger here. We're not going to sit around. We're not going to wait. We're not going to take a huge draw. This is how I would manage it. I've got my key level right there. 38% is right there. I've shaded at 1 pip, about 69.82. We're right after a key release, a key EIA release right here. And the problem is you got to wait. See, right there, we should have got filled. What was the low? The low was 82, and we didn't get filled. That is, you're going to deal with that your entire life. If you're an intraday WTI crude oil trader, the fact that we didn't just get filled and paid off can be incredibly frustrating, and it can really take you down mentally take you down to nothing. Like right there, that was our trade. We saw it at 82. It bounced up to 87, 86. We should already be out of this with $200. Now, the problem that we face right now is that number still good? From my experience, the second and the third time down, it typically breaks, meaning it doesn't necessarily hold up for us. It doesn't behave the way that it just should have. That was the easy money. We just didn't get filled. And there's really, I got to tell you guys, you take enough trades over the last 15 years, you can't let that stuff bother you, even though it still can bother you. Believe me, that'll weigh hard on your mind. Now the market's coming off, and I'm in a precarious position. Do I take this trade and hope the bidders are still there to protect it, or do I pull it off the board and say, I don't want to risk it? The right thing to do is to probably pull it off the board. And the reason why is we've already hit 82. You can see right there, our low is 69.82. It bounced up nicely for us. We should already be out of this with our $200 and talking about maybe our next gold trade or something like that. And instead, if I leave it and I get caught up in maybe a breakout here, then I'm going to be in big trouble because psychologically it's going to go against me twice. Number one, I will have missed the money. I will have missed my 5-tick scalp and my money and my payday. That's the first component. The second thing is I would be in a position potentially to take a loss. Now, taking a loss here, okay, we should be able to overcome those losses, absorb them into our trading, and become profitable over the long haul. And for me, the long haul is about 5 days. All right. But what about the swing? That's what we don't talk about a lot, is the swing. What about the swings of trading? Not only do I take a loss on this trade if, in fact, I get stopped out, but I also lose what I should have made. I was right about our entry point right there. We just didn't get filled. There's nothing we can do about that. If it happens enough, you go get a different broker. That's all there is to it. So not only did we not get the money we should have got, but we also lose the money on our stop out. That's called the swings. It's devastating. In that situation, the live market, I would pull it. I'd be done with it. I don't want anything to do with it. If I wanted to make another trade, I'd say, okay, you don't want to dance with me up there at 82. Let's go down to 70, 69, 70, and we'll dance from there. Interesting stuff here. Very, very quiet, though. I mean, that is what I would call an absolute dead. I don't want a daily. Give me a 1 minute. An absolute dead EIA crude oil inventories. Good moves right there. All right. The reason why is because you had volume. You had about 1,100 contracts there. You had another 981. So you had about 2,000 contracts in 2 minutes. Good volume on the back of the EIA crude oil inventories report. And then you sort of got the buyback. As the volumes dropped, the market stabilized. It was a beautiful trade. What's our low? 82. We didn't get it. Got to grow up and get over it. That's all there is to it. All right, guys, I want to thank you for joining me here today. It looks like we have a problem on our YouTube live chat. So if you're chatting away out there and I'm not answering you, I apologize, but it looks like we're disconnected for some reason. I don't ignore anybody. If you have any questions, I'm sure to answer them. Be sure to cruise by How to Trade, and I will get you up to speed on what we're going to be doing streaming-wise here moving forward. We're still going to be streaming here at How to Trade, but we also are going to be on another platform that many of you are already familiar with. So I'll be sure to pass those details along. That should be pretty good. As far as next week's schedule go, I'm actually going to be heading out. I'm going on vacation next week. Next Wednesday will be my last day here, at least for about another 2 weeks or so. So I'm going to go down and get some beach time. It's been sort of a long 3 months. One thing as a trader and doing what we do, never forget to charge your batteries. Recharge them. Don't let yourself get tired. Don't get run down. All right, everybody, I'm going to go ahead and sign off for today. You guys have a fantastic session. Trade the action well, and we'll talk soon. See you.